This week started off with a setup that I couldn't ignore. I spotted a potential entry, followed my plan, and pulled the trigger. But as always, the market had a few surprises in store, so today I'm breaking down that trade from start to finish. Entry, exit, the psychology behind it, and whether or not it was a win or a mistake. Let's dive in. If you find this breakdown helpful, hit that like button and subscribe. This is FX Titan Lab. Alright, so let's get into it. As you can see, currently we're on the gold chart, and as you can recall, earlier this week, gold was one of the pairs that I was looking at for potential trade entries. But for some reason, price didn't go down to our initial level, but I was able to catch this move even right before it happened, and we'll break that down later on. And but I really want to first start off with the trades that I actually took this week, and the trade was one of the trades that I took for this week was USDJPY and CADJPY. As you can see, the setup of USDJPY and CADJPY were actually similar to one another. And the reason why I trade USDJPY, well, is simply because for like the past 5 months, I was back testing and forward testing my strategy using USDJPY, and for some reason, most of the time, the price in USDJPY was respecting my setups perfectly, you could say, whereby I could get in at a level of maybe like 20 pips, get out 400 or 200 pips, like in a session or a couple of days, and things used to go like that. But just that this week, I probably missed something here and there because of the way that price is moving. So let me just show you the setup. So initially the setup was at this area right here. We're going to take a buy position from this level here, but as you can see, price reached that level right here and only gave us a retracement move. Actually, you can see it wicked slightly below that level even before it gave off this little move. But this move here was not decisive, given the fact that price did not break above this high right here, and that still goes that goes the same for CADJPY. Okay, so just for transparency's sake, I took an L on this one as well. I think I'll post the screenshot for that as well, probably to my right hand side, so you can see those trades. But I was able to manage the risk, so it was good enough. So but then before even that happened, I remember I was up like at around 4 something a.m. and I was able to spot this sell trade here early on in the morning, but I did not take it because I felt like it didn't follow my plan. That was the first thing. And the second thing was I wasn't in the right state of mind to trade. I was, because the move happened from it was taken based off of this little area here. I have my reasons why, and as you can see, it was basically a zero drawdown kind of entry, as you can see. And these are the type of trades that I refer to as the money transfer trades that get activated off of like a liquidity. You can call it a liquidity grab move, where a price wicks the highs, could be the lows, and and in the event that maybe you spotted the level earlier, you put a limit order there. Well, that order gets hit. So yeah, so this was the trade that I could have taken. It could have taken as I was waiting for this buy trade. But I remember at 4 a.m. that was in the morning, Tuesday 6th May 2025. I still ignored it because I had a thought of entering some positions here, because I remember I started to see it. I first saw it here, then I started to see it go down. Then I could have entered here at the retracement, because USDJPY is really friendly with the way it moves. So it's unlike gold, whereby a retracement move like this could potentially blow your account. For USDJPY, the reason why I traded it, it's gentle. You could say it's gentle with the smaller accounts. If at all you don't have too much capital, let's say you don't have like over $500, you could say, in your bank account, or in your trading account. So I could have gotten here. In the event that I was in the right state of mind, I could have gotten here. Maybe stop loss could have been like 10, 18, 20 pips. Yeah, 20 pips usually is still good enough for me. And I could have held this trade, because I'd already spotted that these lows had already become liquidity. I had understood that this was liquidity build up, and that's the reason for the lines that you see right here. That's the reason for the lines that you see right here. So I had spotted the build up, and I expected that by the time price comes to this level, we have this change of character pattern to the upside. But as price returned to this level here, it instead violated the zone. As you can see, violated the zone, and well, we can see that now price has tapped into some random demand zone, and it is kind of like performing the this shift pattern here that we're looking at here. So in the event that price is truly showing that it has shifted to the upside, then okay, fine, then price can keep going. I personally haven't got any confirmations to join this trade, so at the moment I'm not going to take it. I feel like even for the week I'm not going to take any trades, but I just wanted to make this review just for transparency's sake, just to show you the trades that worked out and some the ones that haven't worked out. This is the USDJPY trade, and as I've said, it's still similar to the USDJPY trade. So CADJPY also reached that level here. At the moment in time when I spotted the build-up of liquidity on USDJPY, I had also seen this on CADJPY. So I'd also spotted that these levels here were going to be liquidity. So I'd also expected a similar move. So I'd expected that by the time, let's use the 5-minute time frame so we can see this better. So I had expected that by the time price comes to this level here for entry. So hold on. By the time price comes back to this area of entry right here, after building up this liquidity here, it was around here, like around 5-4. Okay, so I'd expect that price would come to this level here, give us a change of character pattern to the upside, and continue to take the buy orders to the upside. As we can see now, I'm seeing like as if price is again shifting to the upside. We have got this kind of pattern down here, but I think it's following another demand zone that I probably missed. Usually most of the time we can the direction could be right, but then maybe you miss something on the on the chart, so then you get maybe a fake entry. I'm saying that now this pattern has occurred at this level here. As you can see, put it in line chart and you can see it better. This buy order is for the buy order that was here. Remember, I closed it. I'd already closed that position out. I was only looking for an area for re-entry. I think I'll also post that. I think you see it on this. You'll see it on the screen as well. As you can see, price has done this pattern here at some other lower demand zone. As you can see, it's still the same thing. We have a build up of liquidity, manipulation, and then we get a distribution. The good thing about this is that we're still able to follow price with whatever movements that it's doing. And as you know, as traders we have to keep learning from our mistakes. The mistakes that you make on the market, on the charts as you're trading, you're going to pay for them using money. For every mistake that you make, there's $1 to pay. If you don't pay attention and you pick out the right levels and execute properly, well, you're going to pay with your trading account. But with a sound mind and discipline and consistency, you can still be able to make all the money that you could have lost back. You can always make it back. As for the gold trade, I remember that I wanted to see price on gold continue to go lower, potentially to this level right here in the daily time frame, so we can get some buy positions off of this level right here. But what happened? Price respected the demand zone that was created on the daily time frame, and we can see that price failed to come back to this weekly bullish area of liquidity that I wanted price to come back to. And we can see this from the weekly. We can see this in the 4-hour time frame. As you can see, the funny thing is that I was still following the price as it was doing all of this. Now let's go. So from the daily we can see that this was the demand zone. So now we go to the 1-hour time frame. So we're gonna use the daily and 1-hour time frame coordination as we analyze what was happening here. So as you can see, the first reason why I didn't take this trade initially from this level here, because using my strategy I was still able to eyeball this actual weak entry. That's why you see it highlighted here. But then I felt like, it was too low, and also I following another concept of liquidity consumption that I use. I'd seen that almost all the liquidity down here had been consumed, and there were no gaps to like follow up that were found at a significant demand level. So I was a little bit skeptical about this price movement, because sometimes gold gets unpredictable. The moment you get it right, you're able to benefit a lot from it. Now see this. So price then came back and retested this flip zone right here, as you can see, a place or area in time where price was selling. Then after that shifted, so from resistance to support. So from support, this level was not tested again. So that's where we got this other entry from. There was also this lower entry here, but I see that price respected that level better. I had seen that there was a supply zone here, but then you remember, I remember in the Monday video, I think I'd say that this level will get taken, and to confirm whether or not we're going to continue bullish, our eyes would be at this level here to really see whether it's able to hold price lower. So hold price to go lower, or for the price to, in the event that price breaks up above that area, well, we would know that now. Well, the buyers have won the battle, so bullish orders would be more viable for that zone. And actually I was able to spot this setup right here, and I was able to send this out to my telegram group. So I was able to show my members that, given the fact that price has now broken above this level here, at that moment in time, now the monthly candle had shifted and flipped bullish. The monthly candle, this one, had now shifted bullish, so it was above the monthly open line, and now bulls were in control. And number two, the weekly candle had also flipped bullish. So these are all indicators to now give us a true picture of what the true trend is now for a given currency pair. So this is like a yardstick that I like to use to understand, the true trend and true direction of the market, where the market is going. So let's go back to the 1 hour time frame. So I had showed my group members that price is now going to come retest, do something like this, because I remember price at first was giving us fake outs at this level here. It was still indecisive, because as you can see, we had a wick to break at this level. Then price created for us a fake shift or transition level to the downside. But as it did that, it went high above and created now this became a flip level, an area for resistance turned to support. And at the moment, it also looks still untapped. So depending on what price is going to do, we'll see either this level or this level down here get retested one more time. Because I see right now, as price went to this level here of 3,400, just like I'd told my group members, I told them that price has broken above 3,300 line, right? The psychological level, the psychological price level of 3,300, and the next potential target could be, or it was, 3,400, given the fact that also it had now at that point in time violated this supply zone. And at the top, the reason why also the price violated this supply zone is because, okay, usually this wick to wick break levels. The wick to wick breaks leave liquidity, or they act as liquidity. So usually price eventually takes them out. And I was aware of all of these things, so that's where I was able to catch this trade. But I personally didn't enter the trade, because I remember it was around 4 a.m. It's 4 a.m. and some stuff came up, so I didn't take it. But the call was right. Because a person could have, a trader could still, let me first take this off, take that off. A trader could have still gotten in right here. Let me show you. Here are the breakout. Okay. There was one here, this one, after price failed to break below this level here. So you just really have to be critical with these types of things. You know, after you spot a week to week break, this signifies that the other side is still in control. So the sellers failed to break below this level right here on the 5-minute time frame. The sellers failed to break below this week right here with a week to body break. So what did that insinuate? What did that show? Showed that the buyers still in control. So you could have still waited as price did this. You could have still entered right here, because somebody could be asking, but how could you have entered? Well, you could enter right here. You have entered right here at the breakout. And then you hold your trade. You hold your trade. These are things. It doesn't matter that I missed these things right here, but because in the event that I can spot them right now, I will be able to capitalize on them later. It's the skill the trading skill is what matters really. The fact of the matter is, and just like that, this was another 1,000 pip trade on gold. And how much would you have been risking, or how much could I have risked at that moment in time, in the event that everything was perfectly aligned? You can always, I usually just give this like 30 pips. Yeah, 30 pips really is good enough for me, given the fact that I see that there is a week to week break here. So usually I really don't expect price to go back down below there, so I can give this 30 pip stop loss, even if I go to 26, but 30 is always healthy. And target could be a high, it could be a psychological level, depending on how the market is moving. In the event that we're trendy, now we're trending like how you see gold moving like this. Well, you can target a psychological level, you can target literally anything, as long as it's an educated level. You have, in the event that you have studied the level and you framed your trade right. So as you can see, this is another 1,000 pip trade. Now what's happening currently on gold? I want to wrap this up real fast. What's happening right now on gold is that we see that now price has transitioned. Yeah, it just transitioned down to the downside right here after it broke above the 3,400 line. And how does it look on the 1 hour and the 30-minute time frame? How it looks like is that price has tapped into this demand zone right here. Okay, this is the full demand zone. Okay, it's a full demand zone, but then prices particularly reacted at some given level, right? Somewhere inside there. In the event that you're to refine, you'll probably see why. But I'm just showing this is only an insight. But I still see that price is going to potentially take out this level. Why? Because price this level did not push price up above this level. So could be still could be bearish, depending on what price does. So I see a week to week. Let me first see something. Yeah, I see a week to week break right here, but it's still, to me, it's still not conclusive. No, still not conclusive. But as it is for now, I'm not going to be trading right now. I'm just gonna sit back and just watch price do its thing. I'm just gonna wait it out, and probably I will probably wait to see how this week closes, and I will frame better trades with much more clearer levels by the time the weekend rolls out. Yeah, and that's after the weekly close. The weekly close of Friday. Okay. Everything looks good for now. If you took some trades, I think some of my members were able to catch this 1,000 pip move, because I called it before it even happened. And yeah, we'll keep on catching trades like this, because see, they're traders that are able to make literally $1 million of moves like this. So and usually for this, you have to use about 100 lots to make $1 million from this. $10,000, no, $100,000. You use about 10 lots. And you know the rest. 10,000. Then you're gonna use 1 lot. Catching just this 1,000 pip move in how long? In something like 1 or 2 days. So, but then the first step of catching such movements like this is, one, you have to be able to spot them before they even happen. So we have to be able to catch them. We have to know what they look like, how they look like, how we handle ourselves in trades like this, how much we're supposed to wait, how when to take our profits. We have to keep in mind also our account size. We have to risk properly. We have to keep the discipline. We have to keep the consistency, because with consistency coupled with discipline, we're able to risk properly. We're able to manage our money very well, and we're able to stay in the market long enough till beautiful trades like this appear. Okay, so that's it for now. I will catch you guys in the next one.